Okay, fantastic. Well, thank you very much. I don't think we can have a conference anymore without discussing the AI component in any subject conversation. So I'm very pleased and honored to be here today and discuss the trend in data and AI, particularly within capital market. Before I start, I just want to thank the Arab Federation of Capital Market as well as the Qatar Stock Exchange for inviting me to take part in this prestigious event. So thank you very much. So when we talk about AI and data particularly, artificial intelligence, there is no intelligence without data. So part of this discussion will be to really very much look at the data involvement in building some of the models and what the trends are we seeing across major market participants, and we have a very distinguished panel today to uncover some of those trends. And of course, when we talk about AI in financial services and capital market, it is not a new story. In the past 10 to 15 years, a lot of financial services firms have been using AI in their operation, particularly machine learning, algorithm for portfolio optimization, algorithm trading and high-frequency trading, amongst other things. It's also been used within risk management for detection and other areas. But today I want to look at specifically some of the, let's say, capital market ecosystem providers, which are absolutely critical and important. We have the exchange here, and I want to see with you, Gerard, when it comes to leveraging AI within your organization, Nasdaq, how have you been doing that, as well as what benefit have you seen, particularly in the trading and clearing processes? Press.
Better? Okay. So AI is something that we're kind of all in on at Nasdaq. We see it as a kind of global mega trend, AI along with other things like decarbonization, for example. So it's really been a focus for us, and we've got around 20 products at the moment that use AI, from things like our indices and also order types, for example, that were just launched recently. So we kind of look at AI in two ways. Firstly, it's about how we use AI on the business, and secondly, how we use AI in the product.
Right.
So when it comes to on the business, we're really talking about things like how we use AI in our day-to-day work. So it could be, for example, the whole of Nasdaq had rolled out Microsoft Copilot just recently to help us with our own kind of individual productivity. And then specifically, we use things like Amazon Code Whisperer in order to assist with our productivity in engineering and building code. So that's how we think of it kind of on the business, and then it's within the product. So within the product, so for example, I've got two examples here to give you. First one is with our Verifin product, which is our anti-financial crime platform. So when you think about that, a lot of the work that goes into spotting crime is manual and manually intensive. So just recently we launched AI in that product. So it means that people that are looking for trends for financial crime, maybe analyzing relationships between different entities or counterparties, looking at the history of financial transactions between them, that could be quite intensive. So by introducing AI into that product, we've got a kind of headline reduction of 90% saved in the alerts that are generated and the review time that it takes for that. So that's just one quite astonishing little piece of data that we're getting out of AI. And secondly, when we come to things like post-trade, where I work, a couple of examples that we're doing there. Firstly, in CCP risk analysis. So if you think about risk, it deals with large data sets. So clearing risk, you've got a very straight-through process. There's not much that you have to do in that space. But when it comes to risk analysis, that's a good space to kind of apply AI and see what benefits you can get out of it. And so just for example, we're looking at bringing into our product for CCPs a way of determining the best hedge trades to place on a defaulter's portfolio. Okay. And we haven't done it yet, but we're hoping to bring that to market soon. And we're looking at eliminating about 20% of tail risk from a defaulter's portfolio. Okay. And then other things that we're looking at again, with post-trade in mind, is stress scenarios. So presenting a large data set to the AI and allowing it to suggest different stress scenarios that the CCP may want to take into consideration when looking at their risk models.
That's very interesting, because you are using, obviously, training data to do that, and later on we'll go on the processes around the data strategy. But based on the benefits that you have seen on the, let's look at the clearing side, particularly with the 3 CCP, where do you see the benefits may be, particularly for, let's say, your clearing members?
I think it'll be around risk. So if we can identify, so not necessarily for clearing members, because it may actually mean in IM increasing, but if we can identify additional stress scenarios that perhaps weren't identified before, and this very much works as kind of co-pilot, so it's suggestions, it's not what you should do. But if you can throw up additional stress scenarios in a certain look-back period with a certain data set, then you may want to include them within your risk and margining algorithm.
Yeah, that's very interesting. So we've heard from Gerard, very good point. So the use of AI can be done internally, i.e. increasing productivity for, let's say, employees of Nasdaq and others, but also looking at the product to make the product more efficient and more beneficial for the end users who are, in this case, Nasdaq's clients. I'd like to hear from you, Mike, on how has AI been leveraged, your viewpoint on how AI has been leveraged in the index industries, but also to see what have you done at S&P, Dow Jones Indices around that to support you move your agenda forward, both internally and externally.
Sure. So advances in data and technology, particularly AI, have enabled a lot of innovation and new things to happen in the indexing industry, as they have, across the broader financial industry. A little bit of background: at S&P Global, acquired a company in 2018 called Kensho Technologies, and that was really our first big sort of foray into AI. It's an AI data and analytics company, and really kind of powers a lot of what's happening across the enterprise today in AI. So a variety of things we've built, through that unit, a lot of workflows around data analytics, and also internal, like our own internal, like chatbot that's being deployed across the company. So there's a ton going on enterprise-wise. Within indices, the main area that's been able to really kind of move forward with AI is the thematic indexing space. So these are kind of broad trends affecting the industry, kind of transcending sector and industry lines, things like clean energy, digital healthcare, electric vehicles. I mean, the list goes on and on. So in traditional frameworks for indexing, those kind of themes were difficult to measure effectively, because they use kind of traditional taxonomies where the majority of revenues are coming from these specific segments. And a lot of these new trends, including AI, AI indices, can't be put together well using those traditional taxonomies. They're new, companies that are involved, it's not their core business. So in order to really capture that theme, we have these S&P Kensho indices that use NLP, machine learning techniques to scan regulatory documents and filings across 106 exchanges, 86 countries. And so there's a kind of clear kind of framework put in place to define the theme, the types of activities that are involved in the theme. And then the AI is a kind of top level screen to identify that universe of companies, which is then again kind of looked at by humans to ensure it's sensible. There's index committee overseeing kind of the full index construction. So, just in summary,
I would like to ask you there, how do you define the error rate? So obviously doing that mimics what a human being could do, but with higher efficiency and perhaps lower, let's say, error rate with regards to what you'd like to achieve in terms of the output taken from analyzing all those data sets using NLPs. How do you identify that error rate? Because often you can identify the model, but what is the right error rate for you guys?
Yeah, I mean, it really requires both, right? Because you can't, like, humans can't be scanning millions of documents, and it's just not efficient. So it allows for a much more, not only efficient, but more powerful way to identify those companies. But it has to be constructed from experts who understand the industries in order to capture that theme effectively.
Yeah, thank you. Thapelo, for you, how was your journey towards digitalization at the Botswana Stock Exchange, and how were you able to leverage on that to achieve your various strategic objectives?
Thank you, Tsheole. I think, I mean, like any other stock exchange in most African countries, in terms of evolution, we started off being sort of manual in our trading and settlement processes. And then the journey towards digitalization started with the acquisition of automated trading system and a settlement and clearing system that were able to clear the trades as and when they trade. And in doing that, one of the things that we're cognizant of was the fact that the output out of these systems need to be something that can be monetized, and that can also be used by investors in the artificial intelligence, in the algorithmic trading. So the data from the two systems need to be more usable. And therefore, in the process of digitalization, one of the things that we also looked at was the strategy surrounding data sales to generate revenue for the exchange, was to look at the post-data services in order to make our exchange much more user-friendly for people who are going to be consuming that data. So we're able to really transform from a zero contributor to income to the exchange to about a very significant revenue stream for the exchange, which I think is a case for many stock exchanges in Africa. I mean, they were able to monetize the post-trade data and also the digitization of the trading systems by automating to generate data that can be segmented and that can be tiered to various clients depending in terms of their use. And I think you are testimony to that, because you know that we work with your company that helps also about 11 exchanges in Africa to really monetize that data and generate income. And it's actually a very significant contributor to our revenues. But in Botswana, one of the things that we also took advantage of is that we also used data to really achieve our internationalization strategy. Mm-hmm. We are able to digitize data, package it in such a sense that we can be able to reach out to mainly foreign investors in terms of our visibility, and also in terms of them using the data to access our market. So I think it helped as a long-term strategy to really attract investors into our market also. Mm-hmm. So which I think it's a very good thing.
Mm-hmm. Thank you very much, Thapelo, and thank you so much. It's an honor for me to be involved in the continent. Ashar, we've heard from the exchange side, on the data side, we've heard some of the data component, but mostly the AI innovation in the index provider space. You as buy side, what have you seen in terms of leveraging AI within the industry? And okay, I'll just repeat the question. How have you leveraged AI in your industry, and particularly for your company, and what have you seen the main driver is?
Thank you, Selloua. First of all, thank you for the Arab Federation and Qatar for being an amazing host. I mean, that's a great question. Now, technology is something, before I start off with this, we need to first set ground rules that people feel that AI or technology is more like a competitor to the conventional methodologies. I believe it's more like a complementary thing. It's improvising the ways that we do our business on a daily basis. Now, being on the buy side as a fund manager, obviously, if you go granularly to every process, AI and technology in specific has basically been embedded in the core, in the DNA of our industry, whether that be research, execution, portfolio management, creation. I mean, just to give you an example, we're at Yaqeen Capital, we are working on a Yaqeen Algo equity fund. It's going to be a fund which is generated completely by AI. So the trading strategy will be completely computer generated. However, they need humans like us to basically manage that. So, we set the rules, we manage the fund, but the strategy is generated by the AI. So I think it's a thing that we need to first understand there's going to be harmony, and you need to utilize that in a proper way. As you might know this much better than we do, that the bombardment of data that we have nowadays is immense. So as fund managers or as decision makers, our job is to make sure what data is relevant, try to make sense of that. And that's what we do on a daily basis. And again, as an institution, as an individual, I definitely do not run away from the idea that probably I will be replaced by a system someday, but I try to be as competent as I can be to utilize this, and we are doing this on a daily basis. Now, if you go to the simple regression models that are very much, let's say, inbuilt into our portfolio management systems, where you run scenario analysis to see how a typical shock would basically, do that. If you did not use this, you would have never been able to manage your portfolios during the COVID times or during any war that comes in. These are exceptional scenarios which only a system can basically, produce simulations and then give you the outcome so that you're prepared for the worst.
So question to you, because obviously it's very interesting to see that you have used AI for your, let's say, trading strategies, particularly around the equity side. And there are a lot of questions out there from people that perhaps have questions around, and we will discuss about the integrity of the data and the data strategy. But particularly in your example, with all the mandates you have on the buy side, the mandates from, let's say, your clients, how trusted are they in those kinds of models? Have you seen feedback? Do they say, okay, because there's human in the loop, so it's not 100% the AI, but we have experts like you on top of it to make the final decision? Because one thing for sure is that an AI cannot face a judge.
Absolutely.
So how do you go about addressing some potential issues around the mandate that you receive? Do you think it's a theme? Do you have to do a lot of education with your investor base? How does that work?
That's an excellent question, and that's something that people saw in the time of COVID, and also when we saw the oil prices going negative for the first time in our history. So a machine is a machine end of the day. It's trained to do something under certain conditions, certain scenarios. And sometimes the real world operates in very different ways. And that's when the feedback loop is very essential. So the way we learn, a child will never stop touching a hot object unless it touches and knows it's hot. And same as a computer, or same as the AI. Unless you train the AI to react to different scenarios, you cannot do that. And we as decision makers, we have to be on top of it at any given time. So with the inclusion of these systems into our processes, we have to be extra diligent, because not only are we making decisions for ourselves, we are also training the system or the AI or the algo, which is basically doing the work for the masses. So this is what we did, and you have to set parameters. You have to realign almost on a daily or a quarterly basis. So this is something it's never ending.
Yes.
It keeps going. Every day I'm presented with a problem, with a scenario which I've never seen before.
Yeah.
So as I say, there's always the first time for everything.
Yeah.
So you get to see that. And I mean, again, it's let's say, I'd say it's deeply embedded in the entire process of investment management and fund management in specific. So this was only the buy side. If you go back to the, let's say, the compliance related matters, KYCs, AML, CFT, all of these processes are using AI, and they are avoiding a lot of the issues that were coming up in the manual or the older processes.
Yes.
So again, there's a lot of silver lining, but again, with great power comes great responsibility. You need to use this in a very calculated and a very controlled manner.
I want to follow up with a question, and perhaps everybody can jump in, is that one of the questions, and some of the banks I met in London who are very much focused on AI and using data to leverage their processes internally, or have a better value prop for the client base, is that when you talk to potentially upcoming regulation, and this is not a regulation issue, but the explainability of the AI model can be very challenging. Do you see that in your company in a way that, especially when you have models that learn from themselves, so like deep learning, RL, and so on? Do you find that challenging when talking to your client or investor base to sort of provide that explainability behind the model used to reach out a specific output?
Yeah, I just add a little bit on that and then I'll let the panelists do that. Yes, it's a challenge. So if your AI or the systems that you have in place are too simplistic, there are loopholes to avoid it.
Right.
So yeah, then the cases or instances that have to be flagged would not be flagged. And on the contrary, if it's too complicated, it slows down the process of client onboarding and basically all of this activation. So you have to strike a balance. It again happens in like an instantaneous feedback loop. So we have faced those instances and we deal with them on a daily basis.
Fantastic.
So, yeah.
Thank you very much. I don't know if, no, so yeah, go ahead, please.
We do get questions, of course. In indices, I mean, things are, in the index use case I was talking about with like thematic indices, it's a very transparent process around it. So, you know, it's not that complicated really. Like we write out in a public methodology, like what the definition of the theme is, the types of activities that are eligible to be included, and down to like key search terms and things like that that the AI, you know, uses within scanning financial documents. So it's, I think in general, like a pretty clear and transparent approach to it, which is helpful.
Thank you very much. So we have an opinion question for the audience. For those who haven't heard the first, so you have a QR code at the back, so you can scan it with your phone. And we will have the questions up on the screen, I believe, any moment soon. So while we are waiting for the opinion questions to be out and the audience to respond, I will go to you, Gerard. Can you outline Nasdaq overall data strategy? And it's almost like I don't want to ask you this question before I get to the audience feedback. I don't want to give any indication. By the way, any, I think sorry, you have it, it's not on the screen, so you have it. So let me just say the questions. The question for the audience is, in your opinion, what is the most important aspect to focus on when integrating AI in capital markets? So you've got 4 choices. The first one, A, ensuring that the AI provided is transparent and understandable to market participants. So it goes back to the first question I asked. B, maintain fairness across all market participants to prevent the AI from creating imbalances in the market. And again, that's another issue. C, leveraging the AI to increase efficiencies in trading environment. And last, D, prioritizing the security of AI to protect against data breaches and content manipulation. So I'll wait for the audience results. Maybe there is none. All right, so while we are waiting for the audience result, and I hope this does work, I will go to Gerald, and really, I want to see, can you outline at Nasdaq the overall data strategy when considering your AI solution?
I think the data strategy that you need to, well, that we have at Nasdaq is probably not very different from the data strategy that most companies dealing with large data sets will have.
Okay.
So overall, you need a mature data strategy for management of the data. So first, you need to set out your governance and your process around this stuff. You need to understand how you're going to collect the data, which data you're going to collect, how you're going to store it, how you're going to normalize that data, and then what kind of analysis you're going to perform on that data in order to spot the trends, in order to spot the uniqueness of the data that's coming out, and then you have to have the right skills to be able to do that. So you need to have data scientists, for example, within your organization, and then you have to have the infrastructure in order for you to be able to do it. So I think the thing that perhaps sets Nasdaq apart is that we started our cloud journey around a decade ago.
Okay.
So in partnership with AWS, we've been looking at these kind of data management solutions and products and the way of looking at our data, learning from them learning from us as well in a true partnership. And then I think that then you introduce AI on top of it. And in order to have a good AI strategy, you've got to have a good data strategy underpinning it all in the first place. So I think having had that in place for a long time now, together with the partnership with AWS, I think that's probably the thing that maybe accelerates the way in which you use AI.
So question to you, for AWS, do you use the existing model that AWS provides you, or do you tweak them and, add to you? I mean, one of the key things, of course, the sound data strategy is absolutely critical to have any meaningful AI that actually potentially works towards your goal. Do you see that challenges around the methodology you use is a key?
It depends. So we use tools provided by, like I mentioned earlier, we use Code Whisperer, for example, in engineering. But when it comes to use cases, you need to understand what is the use case for using AI there. And there we have an AI lab with specialists in AI. I'm not one of those people that works in the lab, but those are the guys that will understand from the business.
Understood.
The business will come to them and say, I have a huge set of data on trading information and past prices, and I can see a use case for providing more data to CCPs to make their risk models better. We'll train the guys in the AI lab to understand the data that we're dealing with, and then we'll create a methodology around that. So it's very different depending on the use case.
Yeah, absolutely. No, I totally understand that. I don't think we have. Oh yes, we do. Fantastic. Sorry, I will turn to see the results. Oh, okay. So I'm glad the prioritization of data is important. So at what just above 35%. Second, 33% ensuring that the AI provided is transparent. Oh, very interesting. Can you guys see it? No. Okay. So I'll try and read it loud. So the first is the first opinion question is on the data strategy, data breaches, and ensuring that there's no content manipulation at plus 35%. The second is ensuring that the AI provided is transparent and understandable to market participants. Second most important, at 33%. And then after that, you have leveraging the AI to increase efficiencies in trading environment at 22. And the least important for the audience is maintaining fairness across all market participants to prevent the AI from creating imbalances. And by the way, this doesn't mean it's not important. It's just, there's no right answer here. It's just the importance for people. And I kind of really like the fact that the number one is data, because it is true that without a sound data strategy, the algo itself or the AI model is not going to be relevant for the organization and the market. So oops, thank you very much. Based on that, and I hope you just remembered the ratios, what's your first view? Any feedback on the, does that make sense for you guys? What the audience thinks? I start with Ashar.
Again, I mean, it's very intelligent people, but we have a very small sample in here in terms of number of people. So I'm not sure, if we can form a thesis on that. But again, I mean,
very small, but very concentrated in exchanges and CSD.
Absolutely, the most relevant and the most brilliant people in the industry are in here. So that's a good thing. But in terms of number of people, that's the only good thing. But yes, I believe that all of these factors are very essential. So, it has to be simple, for sure. It has to be understandable. It has to be easily implementable. And again, the feedback loop, as we have gone over multiple times, is very essential. And that only goes ahead if you have all of these checkpoints, ticked up. Otherwise, basically, you have a monster which you cannot control, you cannot manage, you cannot alter. So, it's kind of a mixture of all of these. So, again, a respectable audience, we have no option to disagree with you guys, but definitely, I mean, these are very important aspects that they've highlighted. Yeah.
No, thank you, and I appreciate your sample. Sample data needs to be bigger than 400 people, right? When you talk about financial markets, so I appreciate that. Mike, back to that question. So, I mean, obviously this was the follow-up. How do you ensure that data quality is at the highest level for indices? And how critical is this, particularly for those indices that require specialized data sets? And you can give us examples there.
Yeah, sure. So, I mean, it probably goes without saying that data quality is really paramount when constructing and managing financial market indices. We know investors around the world are using our data to make trading decisions, investment decisions. They're benchmarking their funds to them. So it's really critical that people trust the benchmarks, and that's relying on the underlying data and the quality behind that. So not to go into a lot of detail with that, but there's a variety of governance strategies around our data, ensuring the collection of the data, as Gerard was saying, is in a quality manner, and the underlying vendors are of a high quality nature. Operationally, there's a lot of safeguards in place around that as well. I mean, the more interesting part, I think, kind of going forward has been kind of the evolution of these specialized data sets. And there, again, it's critical to not only ensure the quality of that data, but it also provides really kind of like competitive advantages in.
Can you give us examples of those specialized data sets that you think are useful in your sector specifically?
Yeah, I can give maybe like one or two fairly quick examples here. I mean, one would be in the dividend index space. I mean, there's now like several $100 billion tracking dividend benchmarks, whether it's like companies that have high dividend payers, they've grown dividends over time. So traditionally, these indices have been built just using backward-looking data, the highest yielding companies over the past 12 months, things like that. I'm simplifying here. But there's now data sets at our sister company, S&P Global Market Intelligence, has a dividend forecasting data set that's used by a large number of investors for a variety of use cases. But that kind of thing allows us to then integrate forward-looking dividend information into index methodologies, and it's a unique way to kind of evolve those indices. Another example would be in kind of the energy transition space. We've developed indices around transition metals that are like companies that are mining and are critical to the creating those metals. And again, that's an area where it's really complicated. I'm not an expert on this, so we rely on, another data set at our sister company, where it's S&P Commodity Insights mining data set. And they have, number one, expertise in sort of defining which are the most critical metals, which are core, which are non-core, but still relevant. So they're involved in kind of the methodology construction, and then also the granularity of the data to be able to actually know which companies, how much of different minerals that they're producing, and having that quality of data is really the only way to have an accurate representation of the index. So at the end of the day, the quality that's underpinning, the data quality underpinning the index is really what drives the quality of the index itself.
No, fantastic. I don't know if anybody wants to interject, perhaps there, no? Thapelo, how has digitalization and data evolved in African capital markets, and what challenges and opportunities do you see?
Yeah, also maybe before just saying that, I think I also want to reiterate my point that the quality in the data also comes as a result of the earlier point that I made that in digitalization, I mean, you need to get in systems and systems output that that what is going to be getting out of the systems in terms of the data. So in planning to implement an ATS, for example, a CSD, for example, you need to be able to know the type of output that are going to be putting out there in the market, so that consumers of data who use artificial intelligence, like the indices providers, are able to use it quite in a more easier way. But when you come to the evolution of the digitalization, I mean, of data, especially among African markets, you realize that I think in terms of evolution, really, majority from the stock exchange perspective start off implementing by two basic systems in terms of a CSD and an ATS. I think that is the starting point for most exchanges. And then after that comes up the front office in terms of the the broker systems been automated, and together maybe with investors plugging in the broker system to send orders to the exchanges. But I think we have also seen a lot of post-trade digitalization in a lot of markets, in issues such as surveillance systems have been automated. We are also seeing things like automation of the annual general meetings, especially mainly as a result of the COVID pandemic, which forced people not to have some physical meetings. So we have such things like e-voting, and we have also investor relations being done by either platforms or even robotics nowadays, I think, for investors, which I think it's an advancement in most markets. But the other most important one is the one that I also spoke about in terms of data sales. It's a very good evolution. But I think the African markets have been able now of recent to take this a step further. Now they are going into interconnectivity of the markets, and data and digitalization is very crucial in this instance, because now markets are interconnecting with each other in order to enhance cross-border trading among African markets. But of course, some of the challenges are issues of data quality that were mentioned. I mean, it's very crucial that the quality of the data from each market to enable interconnectivity needs to be of high quality. Standardization. You need to standardize and use international standards in terms of the output of the data. I mean, when we talk about turnover levels, are you talking about two sides or are you talking about one side? I mean, those are some of the things that are very, very crucial in that respect. But I think digitalization and data are some of the crucial aspects that have made the African markets to leverage on them in order to carry forward the projects such as interconnectivity.
Fantastic, thank you very much. When we talk about AI, often the question, and you have alluded to it earlier, is Ashar, is the threat of is AI going to replace my job or not? I have my own opinion there. I don't think it is. I think you certainly have to embrace any technology, and I think this forum, certainly people that are here are more inclined to do that. But in your area specifically, how do hybrid models for portfolio optimization that include both human expertise and AI solutions have demonstrated superior performance versus human only?
See, again, I mean, go back to our initial discussion that we need to learn to coexist. So a completely manual model doesn't work. A completely system-generated model does not work. So you need to have both of them. Sometimes you need the man to be under check by the system, and sometimes the other way around. And another question that I need to, another point that I need to highlight is the cost and benefit analysis when it comes to how much humans do I need compared to how much system or AI do I need. Because as a decision maker, for me, it's cost and benefit. So, I mean, I come from Saudi and then in Qatar as well. Energy is one of the, let's say, the cheapest resource available. So, it's like, they're spending like anything. So over here, system spending on electricity for AI is not a concern, which is being done. If you go to the other markets...
I mean, it's not a concern, but it could be from an ESG environmental standpoint. Right?
That would be
the computing power for AI is
absolutely.
Is massive.
So,
yeah.
Absolutely. But again, you need to see the entire cost of the process. In order to run these, the AI mega computers, how much energy are you spending? Is that less than the cost of employing, let's say, 5,000 people manually working on the same process with probably the same output? So this cost benefit has to be done. And by the way, all the economies are recognizing this. So it's not just by default that you go for AI as your only solution, if at what cost, basically. So that's basically the concern here. So the cost and benefit for most decision makers is the first point, which helps them decide how much intervention of humans is acceptable and is, at the acceptable level of, let's say, errors, what's basically needed in there. And then the last thing is the suitability. There are some, I'd say, industries or some processes which have to be manual by any means. Human intervention or the element of the behavioral finance is essential. The moment you take that out of the process, that process becomes invalid. So those processes are still going to be completely human oriented, but other processes, yes, they might be taken over with the AI. So it's again going to be a mix.
Yes, well, thank you so much. And I think that, you know, I hope you guys have gotten some great insight. I've got to put a hard stop, fortunately or unfortunately, but feel free to reach out to any of us during the course of the conference if there is any further point you'd like to discuss. So thank you very much for the great discussion.